Business Television India.
Hello and welcome to BTVI. I am Piyush Jain and you're watching the commodity trade here. It's looking like a good day for the base metals. The oil prices again, those actually are also gaining. Now, what interesting here is that at present the crude prices are right there on your screen, 1.5% up. So again, it's a strong day of trade for oil prices. Gold and silver again, no major action as the dollar index also actually is not showing any sort of major move here. So a mild dip here, 0.3%, but still trading in the same range as we've been talking since last many sessions here. So again, silver, gold, a subdued sort of trade, but still in the same range here. But base metals again, that's looking like a good trade. Yesterday again, sharp spike in the aluminum prices. Today in the LME again, at present aluminum is trading 0.5% up. Zinc is trading 0.5% up. Lead is actually trading 0.5% up. Nickel, copper, they both are trading 0.5% up. Tin is trading tin is almost trading flat here. So broadly across the metals again, and as the future prices are right there on your screen, it's looking like a good day for the base metals here. And then apart from that, it's also actually looking like a good flavor, whether again if you're an agri-commodity trader, it's cocoa, coffee, sugar. In fact, they all are trading with a positive bias in the global markets here. So just be cognizant of the fact if you are an agri trader here. But then broadly again, coming back to the news flow here, what has been interesting is that the Chinese President Xi again basically gave his speech. Again, that speech also basically propelled and also led to some sort of sentimental up move in the Asian markets in the context of the commodity trade here. And the trade war sort of concerns that has been downplayed by the Chinese president, and that has also actually played a part in assuaging the markets, whether stock markets, commodity markets, those actually have seen a positive bias in the trade today. In fact, Xi actually has promised to lower the import tariffs on certain products, and that is whether it's auto and many other sectors he talked about, also in the high-tech area. And perhaps is actually has given the markets some hope that yes, some negotiations are going to get completed here. On the other side, gold and silver prices again, what actually we have seen is because of this speech, it also led to strengthening of dollar. Remember, the trade war actually was seen as a negative lever for the dollar here. So again, this speech has also played a part in boosting the dollar, thereby creating selling pressure for the gold and silver. And that's how the trade actually has panned out here. Base metals, on the other hand, the US sanctions actually have led to an upward lever for the aluminum prices. The sanctions on Rusal, again the Russian company, very high. We were talking yesterday, very high sort of market share for that company in the global aluminum market. 5 to 8% is where the market share is, and because of that again there has been spike in aluminum. Single-handedly aluminum actually was in the focus here. But apart from that, copper again directly related to the trade wars, to the industrial activity, so again that is also actually gaining traction right now. And apart from that, rest actually was a sentimental push for the other commodities here. Now the question is what you should be doing after a good positive uptick in crude and base metals. Let's find out the answer from our guest today, Ashish Shah, the AVP Commodities at Sushil Finance. He joins us live from Mumbai. Ashish, welcome to the show. My first question to you would be, let's first start with the oil prices here. There has been uptick in the oil prices. What do you make out of the current trend here? And what should be a good strategy here?
Yeah, so one is, of course, we've seen a small, 2 days have been positive for the industrial commodities, that is the metals, base metals, and the crude oil. Of course, the main fundamental that is driving the prices is the easing down of the tension between the US and the China trade war. So that is causing, of course, the industrial commodities to perform. I think as far as any copper or nickel or lead is concerned, we may see a small carry spillover effect of this fundamental onto the commodities. So if one is looking at copper, I think one can hold on or buy for a target price of around 448 or 450. But again, I'm not very bullish as far as these commodities are concerned for a medium term basis. It would only be arising out of these recent fundamental updates because still copper is still closing below the 455 mark. It continues to remain under pressure. So exit on rallies and then enter into fresh short strategies around the 450, 452 mark.
Right, and recently what we heard from the market again, basically that there was, while actually discounts, there was an attempt by the Saudis to curtail the discounts being offered to the Asian refiners. They wanted to raise the prices, and again there has been drop in the purchase volumes, in the cargo volumes from the Chinese refineries here. What do you make out of these developments while there are separate events going on in terms of the Iran sort of tensions here with US here, and then what all actually is happening in the global markets with respect to Russia also? But broadly, with respect to this sort of fundamental development where volumes actually have been cut from the Chinese refineries, how is going to play out on the oil prices here?
Yeah. Okay. So, of course, if you're talking about the oil market, it's always a big, we have to keep in mind the OPEC and the US. Now, there is a constant competition between the oil producers for maintaining the market share. So, everyone is not willing to compromise on their position. Now, US is a big threat to the OPEC because they are constantly increasing their production. So it's probably coming under the second largest producer and is taken over Saudi Arabia. Of course, Russia still dominates to to output, which producing about 11 million barrels per day. So, but second in line comes US, and this is constantly overshadowing the efforts put in by OPEC to raise prices by getting into supply cuts. So I think 2018 crude may remain a little bit of sideways, but 2019, if one is looking for a very long term, crude oil prices are going to correct because there seems to be an oversupply market over the next 1.5 year pack. But if someone is looking at a short term, of course, the US and China impact has helped the crude oil prices to rally, but that is not a very strong reason for a trend reversal or something, which does not overtake the fact that there is an oversupply in the market. So one should look at rallies eventually to sell somewhere near the 4200 area on MCX, putting a stop loss above 4250, and it will trade in a range of about broader range of 4300 to about 40,000, 4,000 on the lower side.
So that's the call coming on crude oil here. In fact, just for our viewers, a repeat here is that selling crude oil near 4190, 4200 with a stop loss at 4230 with a target of 4120. That's the call right there on your screen from Ashish here. But then also again a report actually was being published by JP Morgan on crude oil forecast here, where actually the brokerage house is also saying that Brent is expected to average around 69.50 in 2018. 2019 should be averaging around 64, which means they're expecting a downward bias for the oil here, and then also WTI basically a similar sort of downward bias expected in 2019 from 2018 here. Ashish, just coming back before I actually ask you on the other base metals here, what hedge fund managers they actually have done, they've already cut their net long position in the WTI very heavily last week, but they have not cut in Brent that much here. So do you expect any sort of sluggish move once that sort of downtick happens after, as your call is indicating, do you expect sluggish moves in the oil prices for a couple of sessions here?
I think more than the WTI and Brent, because nowadays, I mean, we have seen that, there is not much of a sync, movement between the WTI and Brent. Earlier, WTI used to be the one which used to dominate the pricing, but now Brent is the oil which is picking up attention and is also, independently commanding, having demands. I think it is not going to be sluggish because of any output, I mean, because of the reduction or anything like that in the positions, but it's mainly going to be dominated by the inventory levels, by the cuts that the OPEC comes up with, or any increase in production by US, which is going to mainly drive the prices. So I think whether it is WTI or Brent, the fact that, there is an oversupply of crude continues to dominate the prices, and we will see prices getting capped as and when rallies come in place.
Right, from oil, let's talk about the precious metals here. There has been a weak trade today. Ashish, what's the bias here? What's a good strategy for gold or silver, whichever you prefer?
Okay, so if one is looking at a trading perspective, then I think both gold and silver may have a little bit of correction for today and maybe a couple of other trading days, mainly because the dollar is showing some signs of strength, and gold always tends to react opposite to the dollar. So I think one can look at selling gold near the 30,750 to 770 area, and look at a target price of 30,600 on the lower side. However, a close below 30,500 over the next few trading sessions will indicate a major correction all the way down to about 30,000, 30,100. So one can keep an eye on that level. Silver will follow gold. So I think if gold corrects, silver will correct. But any major corrections in silver for me seems to be an undervalued commodity even at these levels. So I would not look at giving a sell strategy. However, I would suggest investors or traders to wait for sharp corrections in silver and look at buying opportunities near the 38,000 or 37,500 if it comes in the next few trading sessions.
Right, so that's the word on gold and silver. And now again, base metals, the most important, because all the base metals actually are seeing very good uptick in today's trade here. In fact, look at what has happened actually in the recent last two sessions here. Because of the sanctions on the Russian company, again, those stock prices of those companies have fallen by 40 to 50%, either in the Hong Kong trade or the UK trade here. Those holding companies, again, which actually have stakes in the Russian company here. But also on the aluminum, the commodity, that actually spiked almost 5% since the time sanctions were being announced. So, Ashish, what's the take on aluminum here? And there has been an uptick because of the sanctions here, but broadly after a 5% rally, is it worthwhile to buy the metal here, or you would be circumspect here?
I think base metals, I am a little cautious for the next few trading sessions. I would like to rather just observe, not participate right now, because if you see the last four trading sessions, prices definitely have rallied, whether you take aluminium or copper. But at the same time, we are seeing that the volume has not increased. So volume constantly remains a little subdued. So that of course becomes an indication whether it's just a short recovery or a dead cat or something like that. So I would not really aggressively go long. Yes, the fact remains that the trend is positive. There are certain fundamentals which are supportive of the prices. So one is, if one wants to go long, I would suggest to maintain strict stop losses. Again, my preference would remain more towards the industrial metals over aluminium, which is either lead or copper. So I would suggest buying those counters. For someone who is looking at copper, as I mentioned, the stop loss remains about 442, target remains 450. For lead, the target is close to 159, putting a stop losses below 154.
Right, so that was the call on lead and also on copper here. What's your view, Ashish, on nickel also here, and especially zinc here? Because since last some sessions, I think zinc has gone off the radar, typically because of the underperformance here. But then also nickel again. Nickel actually was the one which was outperforming. So what's your take there?
Correct. Okay. So nickel is been one of the silent commodities compared to the other in the last few trading sessions. It is being capped between the range of say about 900 odd on the higher side and 845, 850 on the lower side. So markets are buying supports and selling resistance. On a broader perspective, I think nickel has potential to rise up to 1000 and about 1100. So one can be invested in this commodity. Even if there are sharp falls, one need not panic because the market is very well balanced. It doesn't seem like going below the 800 area. So we're just about 60, 70 points off there. So if one is going long, one can buy, one can probably look at averaging around the 810, 820 area and hold the position. A close above 950 will add more potential or more steam to this commodity. So I think there will be a breakout and one will see upsides to about 1000 if at all one holds. However, as far as zinc is concerned, I think zinc is a little slow moving commodity. We don't see much action happening over here right now. But again, in zinc, 213 to 214 remains a very strong resistance. Only if it sustains and closes above that, it becomes a commodity to look at. Alternatively, at current levels, one can go long, but put a stop loss below 208.
Thanks a lot, Ashish, for all the insights and the strategies here.